Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you, and we'll go over some ideas in that regard if we have a trade sample or two to go through. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts, but with advanced functionalities that you won't find in those platforms. So you log in here in the upper right corner, and we'll find ourselves in the web trader platform. Our focus today is fundamental analysis, obviously. We probably should talk about some of the news that occurred yesterday. There was some inflationary data that came in out of the EU showing a slowdown in inflation, came in lower than expected, matching kind of what happened in the US the prior week with CPI data coming in below expectations. So it seems that maybe the global problem of this high inflation that was there coming out of the COVID pandemic and all the stimulus that was handed out to economically get through that time period, which largely led to the inflationary problems. It looks like a lot of that inflation has really gone away. It's really kind of even accelerated as of late, the decline in inflation. I think the worry starts to flip now to, are things slowing down too much? Is there recessionary data now starting to show itself, and there'll be a focus starting to turn away from fear about inflation into fear of potential recessionary signs, and so probably a focus on jobs data, production numbers, things like this will start to become maybe more important as well as economic data comes in on the fundamental side. The US also yesterday had the FOMC rate decision, and they further. The markets maybe were hoping they would. The stock market tends to cheer lower interest rates, but that wasn't the case. It was not lowered. It was kept the same. But in the press conference, they did speak of an expectation of at least 2 rate cuts to come this year. Some might think that there should be more than that and that there should have been one yesterday, etc. But there is that in the backdrop to maybe lend some optimism moving forward for the stock market, at least, that maybe some rate cuts are coming now, and that the next rate decision should maybe be 0.25% rate cut, 25 basis points in the US. And that's just right in line with both what we're seeing in the European Union, the US, etc., with inflation starting to be more and more under control, and maybe having the ability to bring these interest rates down a bit to ease the burden that those higher interest rates can cause on folks. So that's the situation we find ourselves right now. The markets seem to be pulling down a bit today, especially I saw the DAX really coming down strong. It's because there's a lot of economic policy talk going on in the European Union today. And so expect some volatility there, and I think a potential for a rebound as well there with the DAX. I don't know that there'd be necessarily a prolonged drop, but in that regard, we need to keep an eye on the tariff threats and that situation with the whole trade war situation between the US and the European Union and UK, etc. All right, so let's get into some specifics of what we know is to come today. Okay, things that are scheduled, things that we can be certain of. And so we can start on the economic calendar. And as we go to the economic calendar, we'll look at the higher importance announcements as they're labeled on the economic calendar. And you can set up your preferences on this calendar so that you only show high-level announcements. Basically, high importance will move the currency pairings and different instruments a bit more than the low or medium level announcements will in general. So you can do those settings here on the economic calendar, excuse me, to make sure that you're looking at the announcements you want and from the countries that you want. You can be selective. I tend to pick the G7 countries, European Union, the larger economies I have picked here because they tend to move the charts a bit more. There's more focus on those larger economy announcements. Now we have seen, as has been the trend, and I just mentioned that yesterday's data and last week's data out of the European Union, out of the US, etc. We're again seeing some inflationary data here. This time not the CPI, but the PPI data. This is a pricing index, and it shows that the month-over-month PPI data came in lower than expected. It was expected to tick up after ticking down the prior announcement, and it actually went down even further than the prior announcement. So pricing index showing month-over-month drop in prices, and that was much more than expected and actually in the opposite direction than expected. We also see here that the year-over-year, while it was expected to go up from 0.5 to 1%, it went up much less from 0.5 to 0.7. So again, coming in lower than the expected column. And so that's kind of good news on the inflationary front if you're looking for inflation to be lower. Again, you start to have concerns, is there too much of a slowdown? Okay, you don't want to see prices rising too fast, but you don't necessarily want to see stagnant prices or price decline for extended periods of time either. So as I alluded to, I think fears of inflation are disappearing and moving towards maybe fears of recessionary data, and we need to keep an eye on that. Now, if we go down to announcements that have not occurred yet, we've got a rate decision coming out of the UK, and the expectation, as was the US's expectation, is that the rate will remain the same. Okay, we can look at what type of movements do we have around this type of announcement, and what we tend to see is these announcements don't usually come in above forecast. You see, when I pick the above forecast option, there are no examples to show for that condition. Okay, usually the rate decision comes in at the expected level, which is that they'll keep it the same in this case. Have any come in below forecast? None in the past year here. Okay, so we don't have any data to show if it comes in below forecast, what would the GBP USD movement look like in the past? Or if it comes in above forecast, what would it look like? Because it just doesn't happen very often. So let's choose the condition that it matches the forecast. And if that's what happens today, you can see that 2/3 of the time, the pound strengthened and pulled, the USD strengthened and pulled the pound down as the pound, relatively speaking, weakened against the USD. And so it's 5 times where it dropped, 3 times where it went up. You know, that's only one data point from being 50-50. Okay, so 5 to 3, if one of those would have went up, it would be 4 to 4. Okay, so this doesn't convince me so much. It's less than 2/3 of the time, and the movements up were just as large as the movements down. Okay, 3 really small drops, 2 small rises, 1 really large rise, 2 kind of large drops. To me, this is as close to 50-50 as you can get without the numbers being 50-50. Okay, so a lot of volatility, 75 pip range movement in the hours following this announcement, but predictability in terms of directionality, not high. So maybe we look at different time frames. What about 1 hour after the event? Okay, and I see the same thing. As much upward movement as downward in terms of pips of movement. One more difference here, it would be 50-50. If it was 5-3, if one more went up, it'd be 4-4. Nothing convincing here. It's not like 80% of the time it drops when it matches the forecast, or 80% of the time it goes up. So this data is convincing me that I don't want to trade on this announcement. I might keep an eye to see if it comes in below forecast. Maybe they lower it unexpectedly or raise it unexpectedly. If that was the case, then likely we'd have a more predictable movement. You know, if they lowered the interest rate unexpectedly, probably the pound would rapidly weaken. And if they raised it unexpectedly, probably the pound would rapidly strengthen, because that's the general effect of interest rates on currency strength. And if it happens unexpectedly, then that's when you tend to get a more rapid movement. And so if this comes in at expectation, I'm probably not interested in trading on this based on the data set that we just looked at from the past movements. So I probably will move beyond the Great Britain pound announcement on this and go to the US announcements that are a little bit later. So got manufacturing data and jobless claims coming out of the US. Again, with inflation really dropping nicely, the fear starts to flip. Is the US maybe moving into recessionary data? You know, there'd be a strong eye on maybe, let's say, the jobless claims data. If initial jobless claims all of a sudden spike, boy, that might kick some fears in about recession, right? And that could spook the markets a bit. So we could go back and look and say, okay, in the past, if we're looking, say, 4 hours after this announcement, how many of them came in above forecast, meaning bad news, more jobless claims than expected? How many came in higher than expected with jobless claims in the past year or so? Okay, there were 4 times that happened in our data set. This is going back into last year, so, or early this year. If we're looking at this, we say, wow, when this happens, 75% of the time, the USD gets pulled down by the yen. Okay, I've got USD JPY showing now. Okay, that's pretty significant. What if it goes the other way? What if it's below forecast? And I say, 63% compared to 38, go up. Kind of the flip reaction, not as strong of a percentage in the upward movement, but when this comes in above forecast, that's a pretty strong movement. It's like 80-90% of the pip movement is down. There's only one that went up, and it went up very little compared to the average size of the 3 that dropped, which are on average maybe about here. Okay, quite a bit larger movement than the one that went up. So this seems pretty significant statistically with USD JPY. Now I can check other currency pairings to see maybe there's better statistics on Euro USD, for example. On Euro USD, because the USD is listed second, it's the same thing. The USD weakened. Instead of the yen pulling the USD down, it's the euro going up against the USD, because now the USD is listed second. So it's the same trend. 75% of the time, the USD weakened against the euro as well. Okay, so what I do see is the one that went with the USD strengthening was a larger move than it was against the yen. So I kind of like the yen pairing better if I'm going to go with this to maybe short the USD here if this comes in above forecast, to go with what the statistics show happened the majority of the time. Okay, and you can check, you know, if I get my trade off in the first 5 minutes, what has happened. The average range movement, only 9 pips. Okay, only 9 pips movement in the first 5 minutes, and after 4 hours, the average range movement is 75 pips or so, a little bit over. Okay, so it's not like you don't have time to get your trade off. And we can see, you know, this one that went the furthest went about 94 pips. Okay, so huge potential for profit with this announcement, and looks like there's a trend. If this comes in above forecast, I might be interested in making that move. The below forecast statistics didn't convince me enough. Okay, too close to 50-50 here for me. Okay, so we've got one on the list that looks like something that you might look at the statistics and see a large enough trend that you might be interested to trade as that data comes in. Now, we also could look at the manufacturing data. It's at the same time and say maybe the manufacturing data is driving the movement better. And so all we have to do is say if this comes in above forecast, which would be good news, with the jobless claims above forecast was bad news. But with manufacturing index, if it comes in above forecast, we see the USD strengthening 75% of the time against the yen. Look how many data points we have. That's a strong trend. Okay, the last couple times it wasn't the case, but the majority of the time, 6 out of 8 times, if this was good news, the USD strengthened. Okay, and I don't see why that trend wouldn't necessarily try to continue in the future. Okay, and if this comes in below forecast, 100% bullish, that's a little strange in the data set then. Okay, so what does that tell me? This announcement's not driving the movement. Why? Because regardless of whether it came in above forecast or below forecast, the USD strengthened. So that tells me it's not this announcement that was driving the movement. And in fact, we already saw what was driving the movement. The other announcement that happens at the same time was more predictive. Okay, there's a larger focus then on the jobless claims rather than the manufacturing data, in the past anyways. Because when this came in one way, the strength of the USD went one way. When the jobless claims came in the other way, the USD went the opposite direction. So it's a one-for-one relationship, more so with the initial jobless claims than what we saw with the manufacturing data. So I would focus on this announcement rather than this one for this set of announcements because it was more predictive in both directions. Okay. Now, as we go down, there are other announcements, PPI data out of Canada, again, at the same time as the US announcements. So now I need to probably factor out the USD with the Canadian pairing if I also wanted to trade on this one. So I could have, when these announcements are coming in, the USD JPY pairing open, and then also separately have the Canadian JPY pairing open. So I'm not putting USD Canadian, right? Because these two announcements could fight each other. I'm factoring out the USD from the pairing with the Canadian by doing Canadian JPY. Okay, so if I come here and I switch to Canadian JPY and I say, okay, if the PPI data, which is inflationary data, comes in higher than expected, what is the statistics? It shows that the Canadian dollar strengthens 71% of the time. That's 5 out of 7 times. That's pretty strong statistically. Okay, we have up, up, down once, up, 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 down once. Okay, average range movement 41 pips. And you can look and say, well, in the first 5 minutes, average range movement only 7.5 pips. So I have time to get my trade off where these are barely moving in the first 5 minutes. Then after 4 hours, I see the majority of them end up upward with a much larger movement. Okay, so again, you can play around with different pairings. I could put Euro Canadian, I could put some different pairings to see if I get different statistics and pick the one that I think has the strongest statistics to be the one that I might trade on if this comes in above forecast or below forecast. The below forecast also showing 67%, 2/3 of the time. Again, not a lot of data points on this one. Okay, 2 to 1, that's 2/3, but it's not 6 to 3, which would also be 2/3. So this data set for the below forecast option doesn't convince me because I don't have enough data points. But for the above forecast, we had more data points, and it showed 71% of the time a somewhat predictable directionality if this comes in above forecast. Okay. We could move on to existing home sales out of the US, which also, again, large focus on things other than inflationary data now out of the US. And so existing home sales, both month over month and also for the sales numbers in February, we can look at both. And what we see here is that if this comes in above forecast, the USD strengthens. That's an obvious trend. 83% of the time, larger movements down. The one that went the other way barely went the other way. And so a nice, decent range movement, 38 pip average range movement with almost all of that movement down after 4 hours. Pretty easy to see that trend when these numbers come in better than expected. Okay, USD strengthens. And it makes sense in your mind as well, probably. Better than expected. Home sales, yeah, USD probably should strengthen on numbers like that. Okay. Then if we go, if they come in below forecast, it's nice to see that it's the opposite direction. 2/3 of the time, then you have upward movement with only one really having much of any significant downward movement. This other one just barely moved. So we see a dual relationship here in both directions, depending on how the announcement comes in. So it looks like the market certainly is reacting to these numbers. So we've got existing home sales, Euro more likely to climb against the USD if these home sales are missing the mark, if they're worse than expected. And if it comes in better than expected, an even larger reaction with the USD strengthening quite rapidly against the Euro. Okay. We see, if we look in the first 5 minutes, we've only got 6 pips movement, and half of them were up. And then after 4 hours, almost all of it's down, and down much more, 38 pips. So you could have won on every one of these. In fact, even the one that went up, because it was up more in the first 5 minutes with a false move, and then all of them went down from those points after 4 hours. Okay, so I like the sell on this data set better than the buy. If the existing home sales come in stronger than expected, I'm looking for Euro USD potentially to drop and make a move on it. It's not 100%, obviously, but it looks like the statistics are on your side. I'm less convinced in the other situation. If this comes in below forecast, there was more movement up, but look how small 3 of these were that went up. And actually one large movement up and one kind of large movement down. So that was more mixed, in my opinion. I would probably be selective. And if this comes in above forecast, I'm looking for an entry point to maybe short it. If in the first 5 minutes I can find an entry point like this with a movement up even, or a very small movement down. Okay. So that looks like maybe something that could bring some predictable results. And in the end, you want to try these strategies with limited risk size trades, and don't expect to win on every time you try it. But if you trade on existing home sales for several months, week after week, month after month, and you've tried, 10, 15 trades on each of these different announcement types that come in, jobless claims, existing home sales, CPI data, etc., then you look at your statistics and you say, okay, on the existing home sales, I won 7 out of 10 times. On the initial jobless claims, I won 6 out of 10 times. And the CPI data, I lost more than I won, or whatever the case may be. Then you say, okay, I know which ones I want to focus on then moving forward. And so you start to build some data of your own as to what you've been more successful on with each announcement type that comes in. Okay, let me pause. Any questions, comments on this strategy idea using the economic calendar and the data analysis tools, the volatility tools specifically that we're looking at with these announcements? Okay, and I don't see any questions popping up, but if I do, I'll address them as they come in. Another tool we can use is the Market Buzz that focuses on fundamental analysis. And so along with this, we get some technical analysis help. There are signals here, trend analyses that we can look at. Tesla's been in the news a lot lately, and you can use this tool for the indices, for the commodities, the currencies. I think you tend to get a lot more news with the stocks. It's just the stocks lend themselves maybe to more talk than a particular currency pairing. I see a price prediction, and boy, Tesla's already fallen a lot. They've gotten a lot of bad press lately especially from maybe the part of the market that used to be the biggest supporter of Tesla. What in the U.S. Where I'm from, we call the left, who's more into green energy and saving the earth. Boy, they really used to be a big supporter of Elon Musk and Tesla and the electric cars that they produce. But since he's joined the Trump team, they've all turned on him. They're burning his dealerships and his cars all over the U.S., it seems now, and literally burning them. And the FBI is trying to track down the folks who are doing that. And he's really angered what used to be his base of support for buying his vehicles. Now they're protesting his company and literally trying to burn it down. So that coupled with maybe less of a demand for electric vehicles because of the money pinch that many have felt with all of the global inflation that was there for so long. I think folks are looking to cut costs where they can. With higher interest rates that are there, especially in the U.S., the interest rates are still quite high. They have not lowered the interest rates back down to where they were. So, car loans are not the cheapest anymore. And, electric cars tend to be more expensive than the gas-powered cars. So for a lot of reasons, Tesla's been hit a bit with bearish pressure, but now it's just been put on overload because of the political fallout that unfortunately a company is taking because of the owner. And whether their products are good or not, they're really taking a hit politically right now. So we see a prediction here still that the price may fall yet another 21% or so. This is coming from Trading Central. We can see the technicals on that if you'd like. The technical analysis, there's a breakdown of the indicators that were used, the important price levels, and you can see where this is predicted to fall to. Okay, below 200, down towards 196 or so, where they're recommending to take profit if indeed it does fall. Now, if it goes back above the pivot line here, above 271, 272, then they say look for further upside because that would establish an uptrend. I do believe the buyers will come in eventually. It is a good company. They produce good products. Right now, they're having a tough time. And we can read the fundamental news. It doesn't help that now they have 46,000 Cybertrucks being recalled. We're not talking about the ones that are on fire. We're talking about the ones that are still being used, being recalled, 46,000 of them. Looks like something simple they can fix. It happens with vehicles, different companies a lot. I don't think you read too much into that, but that's certainly not a positive story. And if you wanted to read it, you just click the link. You've got a summary. You can click story continues and read the entire article and make up your mind for yourself. Will this contribute to that prediction of a 21% fall in their price? Okay. He says here, shares of the electric vehicle maker fell close to 2% in pre-market trading. Doesn't sound good. Okay, so you read these articles, they're easy to find using the market buzz, and you can make up your own mind. Do I trust this prediction or not? It seems like the fundamental news is pushing towards this prediction being logical. That the technical signal here of a drop kind of aligns with the headlines. Okay. Here says Elon Musk has become too toxic for YouTube. What else? Thai leads in Thai electric vehicle market with top satisfaction scores. So it's interesting. They score with high satisfaction with the actual product, and you can read that article here, but yet you've got the owner of the company becoming toxic on YouTube. It's kind of a situation where it's more about the politics and less about the product potentially. And so we could scroll down, we could see, I saw some other article that was interesting. If I can find it. Here, what's driving Colorado's rapid Tesla sales slump? If you're not familiar with Colorado, one of the largest city in Colorado being Denver, it tends to lean to what in the U.S. we would call the left, the Democratic Party, which again I mentioned used to be a large supporter of Elon Musk, and he actually was a registered Democrat for a long time. They've kind of turned on him. So it doesn't surprise me to see a headline that in Colorado, Tesla sales are slumping. Now, you could read the article to see why. I'm guessing it's going to talk about the politics of what's going on. What's driving Colorado's rapid Tesla sales slump? And you can read for yourself to see what's going on in a state like Colorado, and why are the sales slumping there in an area where he tended in the past to have a strong base that was all for electric vehicles. So maybe it's competition. Maybe there are cheaper, better options for electric cars now. That could be the case as well. And I believe there is some of that driving this bearish move for Tesla as well. So, but you can read the articles and find out for yourself, what do you think? Okay. So, and then you look at the technical signal and decide, okay, I am going to short this like the signal says, or you're not, if you're not convinced. Okay. So this is a great location to kind of put multiple tools together, the technical signal with the most recent fundamental news, to then decide, do I want to follow the signal or not? Taking into account the fundamental news along with the technicals. And we can look at any instrument that we offer and do this. Okay, it doesn't have to be Tesla, doesn't have to be stocks. We can go to the commodities and we can look up what's happening with gold, what's happening with natural gas, etc. Okay. Any questions, comments on the Market Buzz tool? I'll pause for a moment. Okay, I don't see questions popping up. What we could do, we could do an example of something to look at the risk management side of things as well, potentially. Maybe I look at the gold signal and I see that it's a buy. Okay, Trading Central says, in the short term anyways, as long as the move doesn't drop below 3,025, okay, that's the pivot line. As long as it doesn't drop below there, they're saying buy with take profit up here at new all-time highs for gold. If you haven't been paying attention to gold, it blew by 3,000 yesterday, went up towards 3,050 something, and then pulled back to where it is now, basically at 3,020 something. And the prediction now from Trading Central is it's going to bounce back up to this all-time high, 3,057 and higher. Okay, we can think about the fundamentals. What might drive gold to keep climbing? Okay, there's threat of war continuing in Russia and Ukraine. That's been going on a while, though. It's not really something new. Threat of war expanding in the Middle East. That's something. The U.S. is getting a bit more involved with the Yemen situation, with the ballistic missiles that are being shot at Israel and other places. The Sinai had one land, I think, within the past week as well. I think that was just a bad aim. I don't think it was intended to land in Egypt. But there's that, with the U.S. threatening that if they're hit, they're going to hold Iran responsible. It's the first time that statement was made. So that pulls in Iran maybe into some potential repercussions if, say, a U.S. ship in the Red Sea gets hit by the Houthis. So we're starting to have some more global tensions in the Middle East. That could drive gold up as a safe haven potentially. What else could move gold? Fears of recession. I saw the DAX dropping rapidly today, and then the NASDAQ already followed it. If people are running from the NASDAQ and the DAX, that means they're selling stocks. Where do you go when you're fearful and you sell stocks? Maybe gold, okay? So I can think of multiple reasons why gold might go back up. So then all we have to do is take a look at, if the technical signal also looked good, which we looked at, it says buy, then we have to look at the current movement. If we've considered the fundamentals, now we look at the technicals. The technical signal said buy. We can do our own technical analysis here. I see a support level on the 15-minute candles here. If I'm looking at short-term type move right here, okay? 15-minute candles since yesterday or earlier today. Support, 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 support from yesterday into today. This price level is holding. And all of a sudden we see not that long ago, these are 15-minute candles. We only go back about an hour. It hit right here and bounced. Why did it bounce right off this price? Well, that's the support level from earlier today and yesterday. That's the reaction that the technical traders had, was to buy off of this support level. Now, if the fundamentals are on your side as well, okay, let's start to look at larger candles, 2-hour candles. All right, so what I see here is, if it does break this support level that we just drew on the 15-minute candles, here's the support. It keeps hitting and going back up. If it does break this price level, it looks like you could have a rapid drop, okay? Because the next support levels are down here, okay? The next possible support I see is this old resistance right here, where it was resistance, resistance, and then broke above and up it went. So if we break this support level here, then it could drop clear down to 3,000. Okay, so from a technical perspective, if it does break this support, I might be looking to short this down to 3,000. So I could put a pending order below 3,025, below this support level, and if it hits that price, I want to sell and take profit down towards 3,000. At the same time, I could go with the current technical signal to buy off of this support level with my stop loss below that support level. If it breaks the support, I'm out with a small loss. My profit is much more up towards Trading Central's prediction of getting up here to the all-time high again. That's what that signal predicted. So I can follow that signal and buy, but that doesn't stop me from also preparing in case this support level breaks to have a pending order maybe here at 3,020 to sell with a take profit down around 3,000, which was the next support level. Okay, so fundamentally you might feel there's reason for gold to climb. There's a lot of fear about different things. So it could push back towards that all-time high. But I'll back myself up with risk management down here, with a stop loss maybe, and a pending order to sell in case it reverses. Because we do have some announcements coming today that could strengthen the US dollar. We saw if existing home sales come in better than expected, we saw high probability the USD could strengthen. We just saw that on the economic calendar. And if there's better than expected data out of the US and the USD strengthens, then people might leave the safe haven gold to buy the US dollar. Okay, so because there are fundamental news announcements coming, you can prepare yourself that that news could cause a reversal and cause gold to break this support level. So a double move here could make sense because of the fundamental news setup with the technical setup. So at the same time, I might say, okay, I'm going to, let me switch this to a buy situation. I'm going to buy with the current signal with my take profit just before those take profit recommendations from the signal. So just before the all-time high at 3,055, let's say. So not that far up, 3,055. My stop loss below this support level, which has stood since yesterday. It's not like a support level that's been there for weeks. It's a day and a half support level. But I'm going to go down below that, put my stop loss at 3,020. So it has to really break that support level to hit my stop loss. Okay, so my potential profit's about double my risk, give or take a little. Not quite double potential profit, but near that compared to the risk. And so now I can just change my trade size so I'm risking the amount I'm comfortable with. So I might come over here and say, let me do 0.5, half a lot. With this technical setup, okay, I'm risking 600 to make 1,100. 0.4, risking about 500 to make 900. Not quite 2 to 1, but a nice setup. I'm risking less than 1% of my balance now. Maybe I'm comfortable with that, and I go ahead with that market move with a buy. Okay, where's my stop loss and my take profit? You know, I can look at the chart over here. I have an open trade now, so I went to the open trade area. And here's my trade. Okay, here's my stop loss. I see it's below the support level that we drew here. Here's the support level, the purple line. Stop loss just below it. Where's my take profit on this chart? Right up here near the all-time high, just before it. Okay, and I can see it a little better maybe on 30-minute candles. Okay, take profit here near the all-time high. Maybe I decide I want to cheat this down a little. I can adjust it right here. Okay, all-time high is up there. My take profit is this line here. So I think I'll leave it there, 3,055 or so. But you can just click and drag in this area to change your risk management strategy. I just wanted to pull that down to make sure I'm below the line above it, which is the resistance level that we drew. My stop loss is down here. Maybe I see, here's my support level. Maybe I decide I don't need my stop loss so low. I can pull it up a little. Now I'm risking less. Okay, just like that. And I'm just getting it below the technical support level enough that if it does hit the stop loss, I'm convinced it's a downtrend. Okay, so this is where we can kind of make some changes to our setup if we want. I think this is a good spot to stop. Any questions, comments before we end things? Okay, well, good luck. We've got some announcements coming. We've got that rate decision out of the UK. We've got some economic talks in the EU about banking policies and economic policies that's moving the DAX quite a bit. You might take a look at the DAX 40. I expect after all that sharp dropping, we'll probably see some kind of bounce on that, but we'll see about the timing of that anyways. And then obviously the US announcements that are coming in, initial jobless claims, existing home sales. I think those could really move the market quite a bit. So a lot going on, which means a lot of opportunities. And if you maybe use some of the strategy concepts we went over in this session, maybe you've got a better shot than not of making some profits on some of those trades. All right, everybody, thank you for joining. Good luck. Bye for now.